Even ultra high net worth people have this conundrum. It is one of the most common issues I try to solve, and that is, should I rent or should I buy? The reason I highlight that this is a problem faced by ultra high net worth individuals and families and entrepreneurs and business owners is not to say this whole like, you're not alone, but you're not alone. Remember that. But it's to say that even if you are quote unquote rich, people are often balance sheet rich, not necessarily liquidity rich. So if they're going to put a couple $100,000 down, it's not just going to the ATM. There is real planning that goes into it. Then, from a financial planning perspective, what we need to do is modeling. What we were going to try and figure out is the opportunity cost. If we clear up this liquidity to purchase this house, and are we doing a mortgage? Are we putting 50% down? Are we buying it straight up in cash, not dealing with the interest rates? There's no right or wrong answers per se, but we can figure out opportunity cost. Meaning, if we put the money to work elsewhere and we save by just paying rent, which in some cities can be a lot cheaper, what is mathematically, okay, so now we're not using emotion, we want to use numbers. We want to say 2 is greater than 1, 3 is greater than 2, okay? Some pretty, I know it's a loopy world out there, but some of us still use math. Okay, so what is the point I'm trying to make? Well, as exciting as it's been that the S&P was up more than 31% in 2019, 18% in 2020, 29% in 2021, not so good in 2022, but it was up again in 2023 and has been doing great in 2024. Well, guess what else has been doing well? Gold. Gold is up. The inflation trade is on. If commodities are up, the inflation trade is on. Gold has been on a ripper 2020, 2024, leading year to date. Okay, so equities are up, gold is up, commodities were up. So what about real estate? Well, it's been doing quite well too. 27.5% in 2019, 37% in 2021, 11% in 2023, doing pretty well here, 13.7% in 2024. So the cost of real estate is up. So while my equity positions are going up nicely, do I want to carve out a slice of cash to put a down payment on a home? It's a real conundrum. We're going to get into it here and look at a couple of examples. First things first, it is crucial to highlight that it depends. Not every city is the same. We'll explore some data that will show us that. But let's start with this. This is a bubble index. What they're doing, a score over 1.5. Orange, bubble risk. Yellow, fairly valued or overvalued. Blue, fair valued. Not a big surprise to see something like Los Angeles approaching bubble territory, Miami, Florida approaching bubble territory, Tokyo. Boy, trouble in Tokyo. Some of these places here in Europe, but nothing really showing up here as undervalued unless we were to go into places like the Midwest. Or I'm sure, if we go off grid, certain places in Europe, certain places in South America, all over Southeast Asia. So it depends. But here's really the first thing. It's like if you're gonna buy or rent in South Bend, Indiana, be a good Catholic student there at Notre Dame, it's not the same as if you're trying to be among the coastal elite here in Miami or Los Angeles. So keep that in mind, all right? Everyone's favorite. Let's do some boring math. When you take out a 30-year mortgage, you're not paying back hardly any principal for quite some time. So let's say, okay, you start with a balance of $300,000. In your first year, here's your principal, here's your interest. This depends on the interest rate, by the way. Okay, so obviously, when rates are higher, you're going to pay more. So I forget. I could do the math in my head, but if I'm wrong, then you people will grill me. So don't worry about it. Point being, the ratio of what you're paying towards principal versus what you're paying in interest, not a whole heck of a lot. It does go up over time. So in year 10, as much as double the monthly payment goes toward principal, and you start building equity at an accelerated pace over time. This is why common traditional wisdom at this point is that if you're going to buy a house, you better be committed to living there for at least something like 10 or 15 years. Because at that point, you break even and then you start to be profitable thereafter. If you're only thinking about being there for a couple of years or less than 10 years, chances are the quantifiably, quote unquote, correct answer would be that you should rent instead of buy. Good thing to keep in mind because with rates, let's look at 3.5% versus 6%. This is a $1,500 monthly difference. So when we're talking about opportunity cost, I like to tell people if you could put $1,500 into VOO, which is the S&P 500 low cost index ETF, you could do that for 20 years. Chances are you're on your way to being a millionaire. You're going to be paying $1,500 extra dollars per month over the course of 30 years. Are you going to be a millionaire at the end of that in that house? I mean, it's $1 million loan. I would hope. um, so I don't mean to split hairs there, but let's say you just can save $1,500 per month and put it into the VOO ETF in the 6% rate, 6,000 instead of 4,490, so 4,500 instead of 6,000. I don't know. It starts to become very, very worth talking about in a mathematical way. However, what I come across more often than you might expect is I start looking at numbers in my technical, systemic, analytical, strategic mind. It makes sense to me. People don't think that way. Most of the people I deal with, they have their eyes and sights and hearts set on doing something, and that's what they want to do. I can start telling them, well, you could do this, and you could. They're like, hey, I came into your suit store because I heard you have a great blue suit. Will you just shut up and sell me the blue suit? This is a conundrum. If I'm a blue suit salesman and someone wants a blue suit, why the hell would I sell them anything other than a blue suit? I don't know what point I'm trying to make here, other than that there is pretty simple way to mathematically model and project your opportunity cost. So at least before you just get your heart set on buying property, think about the alternative. Just think about it. That's all I'm saying. And then if you want to just steamroll ahead and go for it, then by all means, go for it. I was flipping through an oldie but a goodie today from April 29th. So about, what is that, 6 months ago now? Buy or rent. Study shows renting is more affordable in the 50 largest metros. Okay, nearly 37% more to buy than to rent on a monthly basis. Nearly 4 in 5 Americans, almost 80%, say owning a home is part of the American dream. That's that emotion I was talking about. People want to do it. They don't care how, they just want to do it. This is the important thing, though, isn't it? Purchasing a home is a long-term commitment. Home price appreciation has slowed considerably, and costs have risen dramatically since the days of 3% mortgage rates, so it's going to take more time to break even on a purchase compared to renting. Key insights: cheaper to rent than to buy in all of the top 50 metros. So if you're going to buy, logically, why don't you get a little suburban there, eh? Get a little rural. Top 5 US metros with the smallest cost difference: Detroit, Pittsburgh, this Philadelphia, Camden, Washington area, Cleveland, Buffalo, okay. Widest cost difference: San Francisco, whew, Seattle, Salt Lake City, Utah. Wouldn't have expected that one. Austin, Texas. I believe that's come down recently, but anyway, cheaper to rent to buy than to buy. Is there anything where it's cheaper to buy? So they did find some places, and you can look at it on a chart here. So Detroit being one, Pittsburgh being one. And that is interesting. It does kind of get you thinking. Okay, so here's your monthly rent versus your monthly mortgage payment. If it's this close, then by all means, buy. If you start seeing a very wide discrepancy, that's when you should start to think, you should train your mind to think in terms of opportunity cost. How much am I saving if I just decide, I mentally lock it away? The difference is going into a low cost ETF, VOO. I'm putting it in for the next 30 years. Hey, it's not a bad strategy. Not a bad strategy at all. Where it's more expensive to buy, my goodness. I mean, don't buy in San Francisco. I could if you really want to do it and you're going to find a way to do it, please tell me you're not doing it up there in Berkeley. I mean, my goodness. Oh my God, are you kidding me? You can rent for 3,000 or buy for 8,500. Dear Lord, that is really something. The choice between buying and renting is a lifestyle choice. It's about balancing finances, more flexibility, lower upfront costs. I mean, are they really getting into anything, or is this just kind of like a chat GPT write-up? Low upfront costs, no homeowners association. If things break down, they're going to pay for it. Rent may increase over time. Sure. Does that build equity? Sure. No tax benefits? Sure. Yeah, but there's no right or wrong answer at the end of the day. It's just one of those things where you really gotta think about what you're doing. Take a moment, work with somebody you trust if you have a good advisory team. And like I said at the beginning of the video, it's not a low class problem. I mean, even if you have money, these are very important topics to consider. If you have any questions, please get in touch. I'd love to consult with you about a purchase such as a house, opportunity cost discussions of renting versus buying, or just target accumulation in general to go to school, to buy a business, whatever you want to do. I'd love to talk to you about it.